What is up, everybody? Welcome back to another video. I just wanted to make this video because it's a correlation that I've been looking at for a while to trading, and it just now kind of more lately is starting to make sense for me. So let's take a look at how fishing correlates with trading. So I grew up in Tampa, Florida, going fishing as a kid with my dad. And over the years, I really started to learn why fishing requires a bit of work to even catch a fish, right? And there are multiple factors that play into going fishing and catching a fish in general. So I wrote down some of these notes, and I'll go over an example of why and how this all kind of plays together. So if you guys look at my notes here, we'll start off with the time of day. So let me just fix this. There you go. So fishing in general, you're going to want to fish at a certain time of day. There's multiple reasons for it, but the majority of the time, if you're in Florida wanting to fish, you're going to want to fish a little bit earlier in the morning because it's not going to be as hot if you're fishing at 11 o'clock to 3 in the afternoon. It's going to be hotter. There's going to be sometimes more people out there fishing, but also a certain time of day, certain fish are near the shallower water or whatever the case is. But the time of day does play a factor into trying to catch fish in general. And how does that correlate with trading? So a lot of my trades happen between 6:30 a.m. market open to 8 a.m. my time, which is here in Arizona Mountain Standard Time. So this was one of my trades that I took last week on Thursday, and as you can see right here at the bottom of the screen, the trade I took happened right at market open, which was great. And a lot of the times I'm in and out in 10, 15, 20 minutes, handful of minutes. Second thing that correlates with fishing to trading is low tide or high tide. So when you want to catch certain types of fish, you're going to want to fish when it's high tide. So what my dad would do growing up is he would check on the news, or at the time the newspaper growing up, and he would check when low tide and high tide is going to happen. And since you can kind of see the prediction based on the moon and where we're at in the month, he would know when high tide would come, and that's when he would predominantly want to go fishing. And the way I see that and correlate that is by looking at the market and if we're trending or not, if we're ranging, or if we're trending upwards or downwards. So a lot of the times when I get into the markets in the morning, my screen is completely blank. There's nothing on here. It's just candlesticks and the EMAs. I usually start on the 1 hour, and I look at kind of everything. And if you are beginner or beginning in trading and just kind of starting, it'll take some time for you to understand if the market's ranging, if we're on an uptrend or downtrend. But if we just look at this hourly right now, and I take this pathway tool, I can kind of show you what we're looking at. Higher high, lower low, lower high, higher high, lower high, higher high. So it looks like we're going on an uptrend, right? Because we continually are making lower highs. So that's the biggest thing when it comes to the low tide or high tide is, are we in a ranging market, or are we trending or trending upwards or downwards? Because that really plays a part in your trading. A lot of setups for people work only when it's up or downtrend. Some setups only work that are in a range. So there's multiple ways to trade, but you're going to want to know when it's best for you and what type of market, ranging, upward or downward trend. So correlating that low tide or high tide. Third is the type of rod. So there's a lot of fish in Florida that you can catch. There's really big ones and really small ones. So you're going to need to fish with certain rods to catch those type of fish, right? And I correlate that with your time frame. So when you look at your time frames, or really when you catch a bigger fish, you need a bigger rod. It's the same correlation when you look at time frames. So if you want to trade on the 4 hour, for example, if you don't know that this is a 4 hour candle, right? It just looks like a candle. But now that I've told you it's a 4 hour candle, we're going to take a tick tool and we're going to block out one of these bodies of candles. This candle is 588 ticks. 4 hours, price moved down 588 ticks. Absolutely crazy move. That's 4 hour candle, right? So now let's take it down to the 5 minute. And let's look at one of these candles, 5 minute candle. If I didn't tell you it's a 5 minute candle, you wouldn't know, right? But now that you know it's a 5 minute candle, let's take a look at the range of this one candle. 92 ticks. Let's look at these larger candles. This was during some news on Wednesday. 288 ticks. So even when there's momentum in news and it's a 5 minute candle, we're still half of the size of the 4 hour candle. And all I'm trying to show you is that the bigger the candle, the bigger the move. Excuse me, the bigger the time frame, the bigger the move. The smaller the time frame, the smaller the move. So you're going to want to know where your setups are. And really this goes down to your personality type too. Are you wanting to trade larger time frames? If so, your move is going to take hours, if not days sometimes, before it actually happens. So that's something you're going to want to know and learn for yourself, is what kind of fish are you trying to catch, and which means what time frame are you trying to trade on. So for me personally, I don't look at anything higher than the 1H time frame, 1 hour, the hourly. It works for me. I look for hourly supply and demand, and that's it. So that's the type of rod that I have, which equals, substantial moves. Moves for me that work. Number 4, the type of bait, which equals the setup that you're using. So let's say you want to catch a fish called a sheep's head in Florida. That sheep's head only bites on certain type of bait. And it's called, my goodness, it's a small type of crab. But you basically have to go to the beach and find these little pellet crabs, I think is what it's called. You find these little crabs, you put it on a hook, and you go fishing, and you're only going to catch the sheep's head fish. Really delicious fish, pretty big, and they swim around the pylons all the time, right? If you bring a shrimp out to go fishing, you're going to catch a wide range of fish, a different type of fish, or multiple types of fishes if you fish with a piece of shrimp. So you're going to want to know what type of bait you're fishing with, and you're going to want to know what type of setup you have. And for me, I know the setup that I have and what type of fish it's going to catch me, right? It's going to catch me a medium-sized fish, and because I'm trading off the 1 hour time frame, supply and demand. And my bait, it consists of a 5 minute demand or supply for entry, right, with the break of structure. This should be backwards. Break of structure is my entry signal, and then the 5 minute demand is supply is where I'm going to go for entry. So let's go ahead and give you an example so that it'd be more clear for you. So we're going to hit the replay button and go backwards. So right now, what we're looking at is just before market open on May 2nd. So I'm looking at the charts. I'm waking up, and we're looking at the time frame. I already looked at the 1 hour. I marked off the 1 hour supply, which is this blue candle. I'll have to make some videos for the supply and demand zones for you guys, right? So now I know that we're in a somewhat upward trending market, but that's okay with me. I just want to look at what happens in this 1 hour supply zone. So then market opens, or right before market opens, let me go backwards a little bit. Right before market opens, I'm just watching this. This is literally what my screen looks like. Higher high, lower high, higher high, lower high, higher high, lower low, right? This is still prior to market open, so I haven't entered, haven't done anything. We make another higher high, and then we have another break of structure right here. So the moment I saw this green circle area happen, this break of structure, which I'm going to have to teach you guys, this break of structure area, that's what counted me in to want to get in this trade at the 5-minute supply. So this blue circle break of structure is my entry signal. 5-minute supply or 5-minute demand, whichever way we're going, is where I'm going to cast my line, which is going to be the last point of this video. So when you go fishing, you're just going to simply cast your line. That's the last thing you do. Cast your line and wait. Really, there's nothing you can do but just wait for a fish to bite. And I used to be, and there's no wrong or right way of doing this, but I used to be a guy that would just market order into things and market order and boom, where, you know, off to the races, and I set my stop loss. And those things do work, and that's fine if you do market order in. But what I've done lately is set a limit order on where I want to enter. So just like you casting your line, you know, you're fishing at a pier, and you're like, oh, I want to hit it as far as I can, right out in that corner or right out in that side. I'm gonna cast my line as far as I can because I think there's going to be a fish out there. You cast your line out, and what are you going to do? Wait. There's nothing you can do. You just sit there, and you let your bait float around, and you wait for a fish to come by. So that's the same idea or principle that I have when I set my limit orders. I put my entry signal at the bottom of this wick of this 5-minute supply candle right there, and I put my entry right here, my stop loss above the 5-minute candle, and I wait. And I wait. So market opens, and we're going to hit play. Market opens, waiting, anxiously waiting, and then the market opens, right? Taps me in, orders filled, take profits at 3R, and hits take profit. So not all the time does my trade go through in 10 minutes, but there are times where it does, right? And this was a perfect example of me casting my line out, waiting, because the market could have not entered me in and just continued moving down, and I wouldn't have been in the trade. I would have been fine with that. It would have been a little frustrating, but I would have been fine with that and waited for the next setup in the next area and threw my line out there to wait to be filled or to wait to have a fish bite, right? So hopefully this makes sense to you guys. I wanted to correlate the fishing world that I grew up in into trading because, you know, as I've mentioned before, everything is trading and trading is everything, and there's always these correlations between life and patterns and trading in the markets. And this is one of those concepts that I hope helps you look at trading and not be so intimidated by it, because it is intimidating, and there are people out there that have been doing this all their lives, and it's not something that, you know, is for the faint of heart. But this is something that hopefully can bridge the gap and show you that it's not as complicated as you think, and that if you approach the markets every single day with this type of thinking, that you're going to wait for your setup, that you're going to wait for the right time to trade, that you're going to check if you're in a ranging market or if you're in a trending market by looking if it's low tide or high tide. You're going to know what type of rod you have, and once you know what type of rod you're going to be fishing with, you generally fish with that all the time. So if you know your time frame that you're going to be trading in, and then you know your setup. If you know your setup, then you just wait and you take the trade. So guys, hope you found some value in this. Let me know if you have any questions, comment below, and like and subscribe.